one thing that that's one thing that really was of great interest to us, to help bring in the investors that really want the land with the home. So that's what our big focus today. So maybe we'll get started. Normally we do a mastermind every other Thursday. Alden runs that, and Alden's on here right now. Today, what I wanted to focus on is the actual notes and deal flow that we have coming in with our new partnership with Jason Roberts and Todd Snipes. They're actually in Florida, seasoned investors in the Florida market. I asked them to come on today. I'm not sure who else is going to be coming in today, but this will be one of multiple recordings that we'll actually do, and we'll cut up this recording to do other marketing media with bits and portions of it. Relative to the main goal is helping us get a handle on funding into the Florida market and deal flow and why we're buying it and so forth. So what I wanted to do was actually go through our actual main site, which is Mobile Mailbox Money, and highlight the actual deals that are in Florida and kind of go from there. So thanks for everybody for coming on. We're going to keep this to an hour or less. Just depends on the conversation that we have, and kind of run it from there. Can you guys see my screen?
Yeah.
Yeah. So this is our main site, Mobile Mailbox Money. Within this site, we're going to have our actual notes for sale. Anybody can go to this site and actually click the registration button. It's free to register. Once you register on, you get full access to the site. But the basics of this site is built off of us looking for investors that want to invest in manufactured home notes. The cool part about, again, the Florida component that we're doing, some of these notes actually include the land. So as I scroll down on the front page of the site, we talk about our homes and land a little bit. And then here's our primary profile inventory that we have going on, which is the Florida notes. So we're going to be talking about these today and kind of do a little bit of a deeper dive into them. And obviously, if it shows available, the property is available for sale of the individual note. So in order to look at the individual notes, I'm going to come up here and click on notes for sale.
So for those individuals watching this recording, these are live deals. Live deals come into the market. We're immediately looking for capital. And that's why we're even talking about it here today on our mastermind. So don't hesitate to reach out. If you have capital in an IRA or solo 401k, these are potentially immediately available.
So I'm going to kind of go from left to right. We actually uploaded some pictures, and we're going to look at the nuts and bolts of the actual little bit of due diligence of the specific property. Let me click on more details on this property. So this is actually the first property that we're working on right now with these guys, with Jason and Todd, and I put some additional content. This property is essentially close to a turnkey property. We have it, and we're going under contract on it as a turnkey remodel property with a comp value of about $140,000. We're actually looking for $105,000 is the note amount, paying either 10% or 12%. So loan status is 10% monthly or 12% deferred. And investor, if you want to get that monthly payment, you can choose the 10% monthly payment. If you don't need the payment, you want to earn a little more interest, once the property sells, then your entire principal will be due, including the 12% interest, which is an annualized amount. So here we put property type as a manufactured home. We believe the fair market value on the property is $140,000. We're looking for about 70% loan to value with a monthly payment of $875 at 10%. So these are normally 1-year construction loans. We actually have the full address on the property. That's a 55 and older park. The cool part again about this specific property and the others that we're showing is in comparison to our Arizona market. Our Arizona market, obviously, we sell personal property chattel loans, which don't include the land. So each one of these deals that we have keyed up right now in the Florida market actually include the land, which is really cool. One of the things that we just put this information up, but I want to add here, Todd or Jason, what is the HOA? It's a HOA, correct, on these?
Yeah, in this in this park, it's $200 a month, but it's got a ton of amenities. Two
That-
pools.
Yeah, go ahead and line those out if you know them.
Yeah, two pools. I mean, shuffleboard, pickleball courts. I mean, it's kind of a dream for the retired age folks that want to stay active. It's this is probably 45 minutes from the beach in Northport. This specific house is turnkey.
So we'll probably, upon receiving a construction loan on this property, offer it out for seller carry finance as a potential exit strategy. So the individual providing the construction loan will probably get the first right of refusal of a higher yield seller finance note that may inadvertently come available. And obviously that's subject to what the end user buyer will want to navigate, what kind of finance they want to use, or if they want to utilize the seller carry finance component, but all areas of potential on this specific property here today.
So we write the contracts as first right of refusal. Obviously, as Alden mentioned, there's a chance the buyer could come into there and fund the property themselves. But what we notice is most people need financing. We'll offer that long-term financing component with no prepayment contingency, which gives them a higher incentive to close on the property and close it quickly because we're offering owner financing on the property. So if anybody's interested in this specific property, we're going to go through 3 or 4 today and look at the merits of each one. Some of them are relatively the same, but this is a new product that we're actually putting on our website. So I just want to make sure everybody that comes in and logs into this Zoom that they know they can simply go in, and we're updating it. Probably I would call it every 24 hours, updating new inventory. If it goes pending, we'll update it as pending or sold. And we'll just go through each one of the properties today. So the next one, here's the same thing. Here's our note amount. It's in the Florida market, $85,000. This is a little bit older home in comparison to the last one, but it's again, we're doing a comp value of about 120,000. The reason why we're buying in this market right now, we have it noted right out there on the sheet. We're buying in the slow market. So right now, obviously, the snowbirds are gone because the weather's hot. We get the same issue in the Arizona market. Right now, Alden and I are really looking at acquiring inventory and to get that inventory rehabbed while it's too hot outside for buyers. And then we end up starting to turn them faster as we get farther into the season. So we're out of season right now when here in Arizona, 115 degrees, not many people want to get out and go look for houses unless they really need to. So again, on this property, we can kind of look through some of the photos. Todd or Jason, if you want to provide a little bit of color in regards to this specific, is this the same subdivision or the same mobile home park or a different one?
Let me see here. This is the address, Hollywood Park. Yeah, I think that 2 or 3 that you're going to be talking about are all in the same park.
So all the same amenities, pickleball court.
Yeah, well, there's 2 sections to the park. Each section's got their own pool and a clubhouse, and there's obviously a lot of bingo and things like that. So there's a ton of amenities available to, again, a 55 and older crowd that lives in this area.
And this is the park you guys were mentioning you had done previous deals in, correct?
Yeah, fix and flips.
So some track record for sure, in this case specific park, that's great to elaborate on.
Yeah, absolutely. It's a great park in a great location. I mean, it's literally off the strip, so you're 5 minutes away from every major amenity that you'd need.
Yeah. Hey, and guys, it's also a golf cart community. You've got transportation via golf carts, very active social life, brand new clubhouse. So a lot of engagement in the community, and a lot of people want to be here.
So entry fee at $85,000. This note will probably come available if someone goes seller finance, and at $120,000 with the land included, a $12,000 down payment, about 10%, for a 20-year term, that payment could be $1,340, so $1,340 a month after our exit to a qualified borrower, providing that first lien position and your collateralized lending opportunity, participating at a higher than average yield of what's participated in the construction loan. So great to kind of, point out some end exit as what that monthly cash flow could be on a first right of refusal execution from construction loan, and ultimately anteing up to the seller carry finance note that probably will come available because financing is kind of scarce on manufactured housing.
So we'll flip over to the next property. Here we go again. The note amount is $105,000. We have a comp of recent sale, $140,000. Again, the purpose of our buy, it's a turnkey remodeled home already. We're buying in the slow season, offering 10% monthly payments, 12% deferred. It's a nice manufactured home. Again, this is in the same park, correct, guys?
It is correct.
So, I mean, this one has the nicer looking kitchen countertops. So they've obviously have some nice amenities to this specific property. So we think that obviously we're taking advantage of the market of buying in the off season, selling in the high season, as well as offering a owner financing component is our winning structure and strategy on these specific properties.
Also, for the people that are watching and have followed our channel and have been on our masterminds before, again, I just want to preface that these do hit probably more of your formal due diligence boxes as the land's included. So that's a big change for a lot of our investors as well as individuals that have been watching over the past 5 years. Just want to super preface that we've got a new collateral type for individuals to participate. We go through challenges at any given time with new relationships of when they bring their formal due diligence check boxes on a personal property chattel seller finance note. It falls within different criteria. Why? Because it's a personal property asset. This is a real property component. Yes, there's a manufactured home involved, but it's affixed to the land, affixed to the lot. So really important just to identify, and if you've failed to reach out before, or you reached out and you chose to move on because of the collateral type, now may be a better time more than ever to reach out today and see what we have available. These are just a few of the opportunities that we're coming across with our new partnership, in addition to the current deal flow that we've facilitated over the past 5 years.
So again, as Alden mentioned, and I wasn't saying that so much on these, the land is obviously included with the home, so you could get conventional financing. But if that's a challenge at all, obviously we offer the owner carry financing, land and home. And then I think this may be the last one on the sheet of inventory. Again, land and home available so they can get conventional financing. The note amount is $105,000. This property is, we think the value on the property is close to $200,000 on resale. Our turnaround time is about 4 to 6 months. The lien holder, the investor, the note investor obviously is getting the lien and only lien on the property, and they'll have first right of refusal if someone comes in and wants to purchase it and needs owner financing. Again, our monthly payment at 10% paid monthly or 12% deferred, with the fair market value of about 200,000. So we're looking at about 70% loan to value, which is 115. Here's our interest payments of $958.33 at 10% if it was paid monthly. This specific property, little details, is a 1989 2-bedroom, 2-bath, double wide. So we'll kind of look at a couple of the photos on the inside. We need to find out if furnishings come with it, but other than that, the home's pretty much turnkey, ready to go. Jason, do you guys know if furnishings come with it or anything else on this property?
It is not negotiated in the contract with the seller, but I would imagine on many of these, that is something that we could do in the future. This is the property that needs a little bit of rehab. It needs some work on the inside, the paint and some flooring. There's about 4 different kinds of flooring in there. The living room and the dining room area, that flooring is new, but it doesn't matter. Like that area right there looks great. But it does need some upgrades on the flooring, on the paint, some of the cabinetry, that kind of thing, new countertops.
And there is no restrictions on if an investor bought this and wanted to place a renter. Is that correct?
20% of that park you can rent as long as you don't exceed 20% of the park. So anytime that there's a rental situation in this specific park, you've got to go to the office and see if they'll allow it, because that's the max number that they can allow is 20%.
Okay. So we'll hop over to the next one. So now this is actually Arizona inventory. So I'll go back because today the purpose, we wanted to focus on this specific inventory. We could, the more I think about it, we could just show a couple of our deals that we have available. We've got a $60,000 note on a newer property that was a rental. This is a property in Monte Vista Resort here in Arizona. We just took it back, and we're going to be doing a little bit of updates and cleaning the carpet or replacing the carpet, etc. We've got a fair market value of $85,000, so we're looking for $60,000 right now with an interest payment of $600. We're taking it back and getting it prepped up, really prepared to sell in the high season. Right now, we're in the slow time because it's summer here in Arizona. But this is a 2014 2-bedroom, 2-bath. Manufactured home in the Monte Vista Resort, which is actually a guard-gated community. Super amenities in this specific park. So we've got a few notes in the Arizona market, but today I really wanted to hyper focus on this inventory here in the Florida market and see if there's any other particular questions that anybody else had that may be listening in or watching this at this time.
Patrick, what are your top 5 due diligence check boxes for people that may be watching here today that have, say, $500,000 in their IRA, and they're watching here and looking at opportunity? Obviously they're encouraged to go get a formal education from the Note Investor University. But what would you say your kind of top 5 due diligence check boxes are for people that may be watching here?
Yeah, I mean, it always comes back to the 3 most important vetted items in a note purchase as is anyways, which is going to be your borrower, your documentation, and your collateral. And so, that when I tend to do business with you guys, I'm more of a stickler, just myself, because we all have our own personal investment criteria that's personal. But me, I always like the ones that you guys have fully gone through. That's just my opinion, right? Because one of the things I value is the value of my collateral in a note purchase. If I end up getting that collateral back, which can happen as a note buyer, and I end up with that mobile home, what condition is that mobile home going to be in, and what's the value of it going to be, say, 6 years from now, right? And I know that mobile homes have a different hold in their value than regular real estate. And I know there's just differences there. I'm not saying one is advantageous over the other. It's just different. So I look at really, really strong collateral. I like when you guys have gone through the whole damn thing, ripped the crap out of it, put granite countertops, new cabinets, soft drawer glides. I mean, it looks inside like it's a new home. And so I wouldn't imagine somebody coming into a mobile home purchase that would walk into one of your full rehabs and go, this thing stinks. They walk in there going, dude, this looks just as good as that freaking $800,000 house I walked into down the road. You guys do a great job with so I love the collateral when you've taken a mobile home, which has that stigma behind it anyways, that you've taken that mobile home and really turned it into an actual home, and when you walk in, you can't tell the difference between, is that a manufactured home or some real house with the flooring, the bathtubs, the showers, the countertops, those kinds of things. So that's what I look for. And then obviously the borrower, is important. And you guys do a fair job then of underwriting the borrower, putting them through proper compliance, those kinds of things. And so you're looking at credit score, past pay history, taxes, job status, income versus expenditure and debt ratio, all those things come into play. And then you find yourself a good borrower, because in my position in the note space, I buy notes for cash flow. So I want to look for a borrower that's just going to pay. It makes my life easy. Okay. And documentation, of course, right? So making sure all the documentation's in place, that you have the legal right to take back the property, that the language in the documentation is written properly, so on and so forth. Signatures match, dates match, those kinds of things. So those are my three big bangers, right? And then there's other ulterior little things we look at and so forth that may help us grade our note purchase, whether we deem this note purchase to be an A, B, C, D, or F. And mind you, I buy A, B, C, D, and F notes. So, but it's a judgment of, do we think it's an A, B, C, D, or F note? And then therefore that usually helps us decide what our offer price is going to be. Let's just say that, right? If it's a D note, I'm asking for a bigger discount. If it's an A paper, I'm usually not. So that's my take on it anyways.
Boom. That was a quick run through of like 10 different due diligence check boxes at this given time. But it's great to kind of talk about, seasoned educator, Note Investor University here, Patrick Franz. And I think that's why people come to us, come to our masterminds, come to our show here, because they know we provide quality collateral. Ultimately, our emulating strategy here in Arizona is going to emulate in Florida, ultimately providing that higher than average quality, in comparison to what's other available products, providing that turnkey solution, knowing values are going to hold, are all areas of conversation and items that we're trying to hit at any given time. So we get that preferred capital when individuals are having liquidity moments or whatever it may be. They know they can come to us for a quality underwritten asset, the homes in a nice area, or, at least decent and safe in the affordability scale, all areas of conversation, and why we built such a brand here in manufactured housing and opportunity. At the end of the day, we just went over $500,000 in potential lending opportunities for individuals that are wanting to earn in real estate with all the benefits of a real estate investment strategy and none of the hardships. Did you know that you could buy a note and participate and get monthly cash flow outside a landlord and tenant? That blows the mind of a lot of investors at the end of the day. So, that's just a few of the many deals that we go through on a weekly basis, doing, upwards of 5 transactions a month. And now with this new potential opportunity with the fellas here today, that number could double. So for us, getting traction of collateralized lending opportunities, upwards of 10 transactions a month, is really big. And that's why we're all sitting here convening and have sent out formal, notifications of the entry into the market, and why we're even going through these deals today.
I have a couple of questions that may pertain, if you don't mind.
Let's hear it.
Let me ask you guys, first question is, what do you guys see as major differences and possible obstacles to transforming your already seamless system that you run in Arizona over to this new area in Florida?
So insurance is of conversation. We're navigating insurance needs, requirements, and ultimately, wanting to mitigate our risk with insurance at the end of the day. So that's definitely one big obstacle that we'll end up fulfilling. We've talked as far as self-insuring our homes and things of that nature. We've talked to multiple insurance providers that'll insure up to $65,000 or replacement cost. So all areas of navigation to be had ultimately entering into a new market. For us, Florida pricing and availability of inventory really matches what we do here in the Arizona market, and it's in more of an investor-friendly state. We like the Florida market. We like the usury in Florida and the availability of manufactured housing. So all areas of interest that we've been trying to bridge the gap from. And then meeting the fellas here, Todd and Jason, at Diversified Mortgage Expo just ended up being, I think, a great potential mutually beneficial program to participate now more than ever.
Thank you for answering that. Now, what is the major differences you see in area based on weather? Because I know obviously in Arizona we get hot, right? We got hot, but it's hot and dry in Arizona. I know in Florida we have hurricanes, we have massive winds and rains, we have flooding, we have all these different things that happen in certain parts of Florida. And are you guys being strategic in the fact that maybe even the exteriors and so on of a mobile home are nowhere near as strong as a house built of stucco or brick or something like that? And so are you guys being cognizant of these areas? And I'm sure that's coming into play with your insurance discussions as well. And that's the reason for these insurance discussions, I'm sure. But I'm sure there's certain areas of Florida where perhaps the weather could be more of an issue than other areas.
This is more of a learning process that we're going to learn and piggyback on with Jason and Todd as to their knowledge and from their experience of investing. Obviously, investors invest in the Florida market, but know that there's an element of risk if it's in Hurricane Alley, as an example. And what exactly is that? It's all a relative risk, and that's why insurance has gotten a little wacko. But there's a solution to each one of those things. Same thing, if we back up a little bit, if we talked about due diligence on the inventory, due diligence is relative to the ability, as a big piece of it is the ability to pay from the borrower. And the interesting thing, I just need to rehash on that, is these borrowers actually have to do 2 times qualifications. And a lot of people don't realize that the qualification, they have to get approved from the park. So what are the things with the park? Number one, the park looks and sees. A critical one is, has the person ever had an eviction? If they've ever had an eviction, they're out. Most parks don't take felons. If they've had a felon, depending on the type of felony, they're out. Most parks are looking for 600 plus credit score. If they've got a 400 credit score or 5 low 5s, they're out. So they're raising the bar is the summary. And the benefit to the note investor is they're getting a higher caliber of buyer with greatest chance. At the end of the day, a note investor wants to do a note that with the greatest chance for the note that's going to be paid and paid on time and ultimately get paid off. So that the raising of the bar by the institutions and the parks that we're working with becomes a much safer zone for an investor to actually look at invest. So I just wanted to put that out because even for us as an investment, as we go through these properties, and we ultimately want to keep a lot of the notes ourselves and put it into the fund, Silvercrest Opportunity Fund. As we do that, we're trying to place the best possible buyer on that specific property that has the greatest chance of performing on that monthly basis and ultimately paying that property off, whether they take it to the entire 20 years.
And obviously that goes with the seller finance notes that we procure after the construction loan. Upon entry from the construction phase, that's really a private lending component, which comes with its due diligence outside of qualifying a borrower double through underwriting, more based on loan to value, the borrower's ability to perform on the rehab, and you're off to the races. You're not so much having to worry about mitigating risk through end user borrower who's going to end up buying to live in the property, where these notes that we've facilitated here in the first half of our meeting today are actually investment loans. So based on a loan to value and ultimately a comp that's provided within the community, we have strong established track record in this park. So, kind of just the 2 case specific differences of vetting, I'd say a private lending component, a fix and flip loan to a seller carry finance transaction. So those are the few deals that we have in Florida that we're just earmarking here today for individuals that are wanting to participate, have seen the marketing going back and forth about our announcement into the market. Kind of little house cleaning. We've got, Arizona Real Estate Investors Association coming up here next week on Monday, or today's Thursday. It's the second Monday of every month. We're there with a booth, cameras, and go over the market. Last mastermind 2 weeks ago, we had Christian Berry, who presented the Cromford report. For those of you that don't know, the Cromford presents market data into Arizona real estate health. Average purchase prices here in Arizona have exceeded $480,000, contrary to popular belief. We actually saw some light depreciation over the past 30 days, so we're seeing some little bit of cooling. But as the Fed actually announced, I think they're going to do 2 interest rate reductions here by the end of the year. They said that at the beginning of this year, but they're, feeling a lot of pressure. So that price could go up ultimately by the end of the year. We have upwards of $250,000 in transactions in escrow right now. And those are homes that are going through underwriting through qualified borrowership and fitting qualifications to facilitate a seller carry finance transaction. Those notes vary from 44,000 to 150, and those are at the higher than average yield, on average with an $80,000 acquisition, paying $800 or more a month with your first lien position. And those are notes that are immediately available. I think we have another $250,000 in commitments coming in from new investors that have met us just from the content that we posted just like this. So, if you're watching today and you've been sitting on the sideline, now may be your chance to start participating. I'm going to share my screen here real quick and go through one note quickly on manufactured housing here in Arizona that we have immediately available. And why am I even doing that? Well, it's a low loan to value on this property and a double-digit yield. So looks like I'm sharing my screen here. Okay, boom. Participants can now see your screen. You guys see the Dropbox here?
Yeah, click the green button. Can you click the green button so you can make it a full screen on the top left?
Oh, here. Better?
A little bit better. Or maybe it's my screen set up.
Okay, well, here's lot 125 in Chaparral Village, located 400 West Baseline Road, Tempe. We've done upwards of $2 million in transactions in this park with our formal institutional relationship, CalAmp Properties. They own, I think, 100 parks across the nation, mostly here on the West Coast. This is a 3-bed, 2-bath that we undersold probably by $40,000 for a quick sale, providing an end user the availability to match or beat market rent. They're actually beating market rent with this price point. Buyer paid $49,500 for this property. They're putting $5,000 down, and that monthly payment, real quick, on a $44,000 transaction, a unpaid balance of $44,000. Their monthly payment is $547. Oh, hold on. Mortgage calculation error here. For a 20-year term, $44,000 acquisition at $579.39. If you have a mortgage calculator, go ahead and type that in. It'll show you what your return on investment could be. And we could potentially, for a accredited investor, absorb this note into our fund, providing a more passive rate of return in a lower term than, say, 20 years. Not everyone wants a 20-year term on a seller finance note. Completely understandable. I can hypothecate this same note for a non-accredited investor at a 1-year term and a negotiated interest rate, depending on how we help you participate. All areas of conversation. Currently in the fund, we're offering a 1-year term at 10% net paid monthly, or a 3-year term at 12% net paid quarterly. And that's on a note just like this. So really, for a note investor wanting to hedge their bet out in the market, they're going to do formal due diligence on what the end user borrower is going to have as far as options for housing here in the Valley. And what does that look like? What's rental rates here in this Tempe market? Well, I'll show you. Here at apartments.com, we see 1-bed, 1-bath and studios as low as $1,400. This monthly payment, including the lot rent, which is $950, is like $1,700, which is pretty cheap, including the lot rent, the home payment. And a 1-1 is $1,400. You see 3 bedrooms as high as $3,800, $3,000. This number has gone up in the past 2 weeks since I've even looked at this. 2 bedrooms as $2,900, $3,100. 4-bedroom, $10,000 a month. That's crazy. Haven't seen that one. But all in $1,711 with home payment, lot rent. Insurance and taxes will be just a little bit more. Actually, that's all in with insurance, taxes, the home payment, annual estimated lot rent included, or monthly. Sorry about that. $1,711. So add or beat market rent, hedging your bet in a first lien performing asset at a double-digit yield. And if you run that through your mortgage calculator, that could be a 15% yield on your first lien acquisition for $44,000. So that's just a quick, light due diligence walkthrough. Obviously, upon formal commitment from a capital investor, we'll send the full collateral file. Well, what does that include? For the full collateral file, it includes the buyer's ability to repay, so their verification of income, either bank statements or tax returns, as well as a credit check and formal approval from the mobile home park. Mobile home park goes through formal verification of no past evictions, no open bankruptcies, no past criminal convictions, and satisfactory credit score or ITIN number. Us here touching Mexico, got a lot of Hispanic families looking for housing, hardworking, tax-paying individuals. So those are just what you'll receive with your soft commitment on a note just like this, providing a double-digit yield. Don't hesitate to reach out if that's something you're interested in, and have this new relationship here with the fellas here. A little bit different in products, but still opportunity available.
Lots of things to think about, but we're really excited, obviously, about this Florida market. I think it's going to help this company. We'll probably double in size. We just need to get the wheels greased and get it rolling, get the wheels spinning up. Each week we plan on profiling inventory, profiling more of our notes that we have for sale. They're going to change the deals and the opportunities because they're going to sell, and ultimately we'll continue to bring more deals, whether it's the Florida market or the Arizona market. But it's really focusing on low-cost housing at the end of the day. So we're creating an opportunity in Florida now, as well as Arizona, capitalizing on low-cost housing in the U.S. market, which is a super demand. Housing is even with interest rates at high, the average consumer can't afford to buy a single-family home, so they're looking for alternative housing, and this is just a great alternative to affordable housing, to single-family homes, an alternative to that. And interesting enough, not many people talk about manufactured homes and parks. And I think it kind of got away, especially when single family homes were half the price of what they are right now. It wasn't a conversation, but now it's becoming a norm, an actual new conversation of people, especially people in retirement going into 55 and older parks. It's a great fit for somebody that's in 55, want to downsize and want to live with people that are kind of like-minded. They want bingo, they want pickleball, they want the pool, they want to just go hang out with people that are like them. In comparison to being in a regular single family home subdivision, you don't have the amenities. These parks have all the amenities. which is actually a great win. That's why everybody's moving from upstate New York to Florida and the Boston and the upper East Coast. Where are they going to? They're going to Florida. We get in Arizona an influx of people in the Midwest market, and we get Chicago. So huge influx of people coming from Chicago market and the Midwest market coming into the Arizona market, but probably some of them equally are going to the Florida market. So I think us venturing into the Florida market is a super compliment because we're still dealing in the low cost housing market, which is manufactured homes and parks. Other opportunities will come up, but our primary specifics is that low cost housing. So we're excited about it. We're excited to have Todd and Jason on with us. It's a new venture and we'll get all that worked out. But at the end of the day, it's all about opportunity, presenting the best opportunities for our note investors to capitalize on the market and make sure that they are in the best possible note position on a specific property. And that's our responsibility, putting out a quality product, have a quality buyer, and create a turnkey system for note buyers that are out there.
You know, and I think that it's a great time, you know, now more than ever. Why? Because there's a huge need for capital investment and a safe, stable, you know, contractually agreed upon return. Talked to one of our largest investors the other day, and he's lost close to $1 million in multifamily syndications because of fluctuating interest rates. You know, also, you know, the hardships in Airbnb right now. Not all that easy to just go buy a house, rent it out, and receive cash flow, and ultimately, you know, not have to be burning negative cash flow for the want for appreciation. Well, appreciation has been staved over the past 6 months to a year. You know, will prices go up if interest rates come down? You know, there's a lot of uncertainty out in the market, and to find qualified operators actually publicly operating, you know, with a brand and a name, ultimately to establish a relationship like that for a capital investor right now, I think there's really people waiting on the sidelines because of uncertainty, and to find a collateralized lending opportunity with deal flow just like this, you know, for doctors, lawyers, and busy business professionals making a high income, wanting a return on investment out on the market, you know, there's little to no options to receive an income-oriented investment strategy. You'll go to your FA is going to talk you into a combination of bonds and mutual funds, because, you know, you're wanting to mitigate your risk out in the market, and you'll be satisfied with the lower rate of return when you probably could have bought that stuff on your own to begin with. You know, now may be your chance to start participating at a double-digit yield and get real collateral out in the market. These are not deals that are known to everyone. This is brought to you exclusively here today through Mobile Mailbox Money, and providing also the accredited investor a bank quality stability in Silvercrest Opportunity Fund. That's a 506c accredited investment fund. You know, listen, this is a golden nugget of opportunity out in the market right now, and you're missing out if you've failed to reach out. So if you see stuff on our website and you have questions and you didn't get a chance to even come to our mastermind today, don't hesitate to call 602-888-CASH. That's 602-888-2274. There's an immediate associate waiting to answer your questions, even on the chat at mobilemailboxmoney.com. If we don't have any additional feedback, we'll probably let everybody go. This has been a value-packed meeting today. We do this mastermind every 2 weeks on Thursdays at 12 o'clock Arizona time, and we may be bumping that up to every week. And currently it is free, so don't hesitate to go sign up on mobilemailboxmoney.com while it is free, so you can get access to our deal flow, get access to ask questions, and maybe even learn how to invest your IRA into alternative assets like real estate notes, private lending, or start raising private capital with your relationships that you have. Your uncle owns, 50 homes in their portfolio. Your aunt has 50 million bucks in an IRA. You know, all areas of conversation to help you convert unfiltered value here today. Any questions or follow-up from anybody here today? just happy for the opportunity. That's mobile mailbox money. Today's brought to you by Silvercrest Opportunity Fund. Appreciate having you
Don't
guys
forget
here.
that.
See you next 2
Welcome
weeks.
to Silvercrest Opportunity Fund.
Bam.
Passive, really I think this massive, stable cash flow, lavish, about to finance for the masses, this 14% in manufactured housing. Really all the deals I've been doing is kinda hard to keep them counting. Not really, 10% for the year, it's clear that this the new wave. Little competition in my arena, need a house, man, you call Serena. Strategy so boring, didn't even mean to not remind them. There's another check right behind them, right behind them, right behind them. 10% passive. The checks outlined with collateral. 150 performing notes. I think I should take a sabbatical. Adaptable with the terms. Justify that 1 year that you earned. 10% in bank quality notes if the market has you concerned. Accredited investors seeking stable returns. One thing I've learned, being burnt, you gotta invest long term to move the worm into the urn. Turn the page, turn and earn. Earn the page, earn. Learn the way, earn. Earn the pay, earn the pay. Earn the pay, earn the pay. Passive. Really, I think this massive, stable cash flow, lavish, by the finance for the masses, this 14% in manufactured housing. Really, all the deals I've been doing is kinda hard to keep on counting. Not really.